Home insurance premiums have been rising steadily, but they could be set for a major spike due to billions in losses last year.
From wildfires to hailstorms to flooding, severe weather is causing massive claims, putting pressure on premiums.
A condo building in Abbotsford, BC, just outside Vancouver, got its insurance renewal notice in 2020. The premium the year before was $66,000. The new bill, $588,000. That is a 780% increase in 1 year. And that was not even the worst case. Buildings across Metro Vancouver were seeing premiums jump 50 to 300% on a single renewal cycle. Strata deductibles, the amount owners have to cover before insurance kicks in, went from $25,000 to as high as $750,000 in some buildings. One strata corporation in Vancouver reportedly carries a water damage deductible of $1 million. This is the story of how Vancouver condom insurance got completely out of control, why it happened, who got hit the hardest, and what it means for anyone buying, owning, or renting a condo in this city right now. If you own a condo in Vancouver, you're actually part of something called a strata corporation. Every unit owner in your building shares ownership of the hallways, the lobby, the elevators, the roof, everything that is common space. And under British Columbia's Strata Property Act, your building is required by law to carry insurance that covers the full replacement value of all of that shared property. That policy is paid through your monthly strata fees. So when the building's insurance premium goes up, your strata fees go up. It is that direct. Now here's the part that catches a lot of people off guard. There are actually two separate insurance policies in play when you own a condo. The first is the building-level strata policy, which covers the structure and common areas. The second is your personal condo owner's policy, which covers your unit and your contents. According to Sean Ingraham, Senior Vice President with First Service Residential, the building's strata policy can carry a deductible in the 5 or 6 figures, and that amount can get charged back to individual unit owners when something goes wrong. In other words, if you accidentally flood your building, a washing machine hose fails, a pipe bursts, your strata corporation can come after you personally for their deductible. We are talking amounts that used to be $5,000 to $25,000, but are now sitting at $100,000, $300,000, and in extreme cases, more than $500,000. And personal insurance that covers those amounts is hard to find. One Vancouverite, a 49-year-old named Jose Antonio Maestre, told CBC News that his building's deductible jumped 400%, going from $30,000 to $150,000. And he said, quote, "I would probably have to sell my apartment just to cover the deductible." The problems started quietly in October 2019. That is when strata corporations across BC began renewing their annual insurance policies, and the quotes came back completely different from what they expected. According to data collected by the BC Financial Services Authority, the provincial regulator that investigated this, strata insurance premiums in Metro Vancouver jumped 50% on average in a single year. Across all of British Columbia, the average increase was 40%, but those are just averages. The BCFSA data showed that 31% of strata properties saw premiums rise between 30 and 50% in that period, 9% saw increases between 50 and 100%, and 6% saw their premiums go up by more than 100%, more than double compared to 2019. The Eli report, a platform that analyzes strata documents for Metro Vancouver, looked at hundreds of buildings and found that by early 2020, insurance premiums had surged an average of 65% in just the first 3 months of the year. 15% of the buildings they assessed had premiums that at least doubled. Some saw increases as high as 240%. And here is the part that tells you how bad it really got. The lowest increase they recorded in that period was still 20%. Tony Gioventu, executive director of the Condominium Homeowners Association of BC, put it plainly when speaking to CBC. He said these conditions had been building for 3 to 5 years, and they all came together at once. Here is what actually converged. First, the number of insurers willing to cover strata properties in BC dropped sharply around 2019. Although there are roughly 65 insurance companies licensed in British Columbia, Giaventu said at the time that only about 6 or 7 of them actually offered strata insurance policies. When you have that few players in the market and demand is not going anywhere, they can charge almost anything they want. Second, claims had been piling up. Condo buildings generate a lot of water damage: burst pipes, leaky appliances, failed seals. When a pipe fails inside a 25-story building, it doesn't just damage one unit, it damages 5 or 10 units on multiple floors. Insurers had been paying out expensive multi-unit claims regularly, and the losses had been adding up for years. Third, construction costs had been rising fast. Under BC law, strata insurance has to cover the full replacement value of the building, and rebuilding costs had gone up sharply. Materials, labor, everything. From 2019 to mid-2021 alone, lumber prices spiked roughly 400%. When the replacement cost of a building goes up, the insurance premium follows. If you own a condo in Vancouver or you are thinking about buying one, this information directly affects your costs. Hit subscribe so you do not miss the next video. We break down the Vancouver housing market every week with real numbers. As of March 2026, industry analysts are warning that more than 130,000 condo owners in Metro Vancouver could face special levies totaling nearly $1 billion in the coming years. That figure is not coming from insurance alone. It is the collision of rising insurance costs, aging buildings, and reserve funds that are not big enough to cover what is coming. A lot of Vancouver's condo supply was built during the late 1990s and early 2000s. Those buildings are now hitting the age where major components start to fail: building envelopes, balconies, elevators, parkade membranes, plumbing systems. At the same time, insurance costs for those buildings have doubled or tripled, and deductibles for water damage are sitting between $250,000 and $500,000 at many buildings. When insurance costs go up that much, it gets passed directly to owners through higher strata fees or through unexpected special levies. According to StrataCalc's 2025 update on Metro Vancouver strata fees, a typical concrete high-rise is now running strata fees of 55 cents to 70 cents per square foot per month. For a 750 square foot condo, that works out to roughly $400 to $500 per month, and insurance costs are listed as one of the primary drivers of those numbers staying elevated. A November 2025 report by TD Bank found that the frequency and cost of catastrophic weather events, those that cause at least $30 million in insured losses, have risen significantly in recent years. BC was hit hard. December's atmospheric rivers caused nearly $90 million in insured damage, according to the Insurance Bureau of Canada. Tony Giaventu told CBC News in January 2025 that climate risks in BC are particularly serious because the province sits in a seismically active zone and is vulnerable to both wildfires and flooding. He warned that homeowners need to pay attention not just to premium increases, but also to exclusions, coverage being quietly removed from policies. In other words, some buildings are not just paying more, they are paying more and getting less. Daniel Ivins from Rates.ca pointed out that 2024 was the single most expensive year on record for insured losses in Canada, with over $8 billion paid out in weather-related claims. The Jasper wildfire alone hit $880 million. The Calgary hailstorm caused $2.8 billion in losses. Southern Ontario flooding came in at $940 million. Quebec flooding added another $2.5 billion. With that level of payout, insurers are recalculating risk across the board, and condo owners in cities like Vancouver are feeling that repricing. There was another factor that pushed things to the extreme in 2019 and 2020, something called best terms pricing. When multiple insurers covered the same building, this practice allowed the insurer offering the highest premium to set the rate for everyone. That meant rates got pushed to their highest possible level automatically. One Vancouver condo building saw its insurance bill triple to nearly $500,000 because of this, forcing a 22% increase in strata fees just to pay for it. The provincial regulator stepped in and best terms pricing was halted in BC by mid-2020. That helped cool the most extreme spikes, but the other pressures did not go away. Agents in Metro Vancouver say buyers are now paying closer attention to a building's insurance profile before making an offer. According to Bridgewell Group, a Vancouver-based real estate brokerage, lenders have started refusing to offer mortgages on buildings that carry extremely high insurance deductibles. The logic is straightforward. If a building has a $500,000 water deductible and no one in the building can cover it, the whole property becomes a liability risk. Higher strata fees from insurance costs also affect how much mortgage a buyer qualifies for. When you add $400 to $500 per month in strata fees into a stress test calculation, it reduces what the bank will lend you. So the insurance crisis is quietly tightening affordability, even beyond mortgage rates. Buildings with high deductibles or a history of large insurance claims are starting to see buyers back off. That puts downward pressure on resale prices for units in those buildings. The risk is no longer hypothetical. It is showing up in sales data. A building with a $750,000 water deductible and strata fees that have climbed 30% in 2 years is a harder sell than one with clean financials. According to the Insurance Brokers Association of BC, the most practical thing strata owners can do is reduced claims. That means enforcing no smoking rules, no barbecues on balconies, upgrading washing machine hoses from rubber to braided steel, and keeping drainage systems properly maintained. Buildings that can demonstrate fewer claims are getting better renewal terms. Individual owners need to review their personal condo policy every year and make sure it covers the current deductible charged by their strata corporation. Sean Ingraham of First Service Residential says strata corporations are supposed to notify owners when deductibles change significantly, but it does not always happen. Do not wait to find out from a claim. As of early 2026, there is some good news. Business in Vancouver reported in February 2026 that strata deductibles in BC are beginning to decline, with a softer insurance market bringing in more capacity. Buildings that have reduced their claims history and maintained good records are seeing some relief on renewals. But the overall picture is still under pressure. Vancouver home insurance premiums rose nearly 10% in 2025, according to a report reviewed by MyChoice. Renovation inflation in the city was running at 1.91% last year, and replacement costs remain elevated. Climate-related risk is not going down. The TD Bank report from November 2025 makes clear that catastrophic weather losses are trending in one direction, up. The BC Chamber of Commerce has been pushing the provincial government to intervene and provide more structural solutions to the strata insurance market. The Condominium Homeowners Association estimates that up to 10,000 strata corporations in BC are still navigating the effects of this pricing environment. Real estate deals were falling apart at the height of the crisis because financial institutions would not touch uninsured buildings. That pressure has not fully resolved. The numbers tell the story. A condo that seemed affordable at purchase with a manageable mortgage and reasonable strata fees can become a financial problem fast when a water pipe fails and the deductible is $300,000. When the insurance premium doubles on renewal and fees go up 22% overnight. When you need to sell and buyers back off because of what is in the strata documents. Vancouver has always been expensive, but the insurance crisis added a layer that a lot of buyers and owners never saw coming. Homeowners, renters, and investors are all watching this closely right now, and they should be. If you found this useful, subscribe and leave a comment below. We cover the Vancouver housing market every week. The real numbers, the real shifts. See you in the next one.